Hi everyone, hope you're well. Welcome to another video from SMCFX. So today we're going to be talking about one of the biggest reasons why people lose their trades. And this is a good example of how people could have been on the wrong side of the markets. So to start with, what I want to cover is a trade that myself and one of the mentorship students took in the group the other day, which is actually this short just here. So I'm just going to break down exactly what was going on here. Now, if I just drop up to the 4-hour time frame, we can see we've got this supply zone just here, which is where price is roughly now. So let's just drop back to the 1 minute and have a look at what we've got going on here. Now, as you can see, this large pink supply zone, that's the 4-hour supply zone that we marked out. And then when price came in to this supply zone, I had this as a point of interest that I was looking at. Now this area then got broken past by this demand zone just here. So this is where I started to look at what price action was trying to tell us. So from here, it was this demand zone that pushed price above the 4-hour supply. And then what we had going on, we had some liquidity generated here with some imbalance left behind. So I was looking at this as a favourable area for a potential long. And I emphasise the word potential because the way price action developed afterwards, it showed that it was not a good idea to be going long from there. And we'll cover that. So what we had going on, we had this supply zone, which it wasn't a completely favourable area for me looking for a trade. However, there was a trade opportunity there. So as you can see, price tapped into the supply zone and we had a rejection and we pushed down and we had a breakage structure here. Now we could have had a short scalp trade. I think this would have been about a 5-hour trade potentially within this area. Okay, and I think the target about 5-hour would have been somewhere around here. But I didn't take that trade. I wasn't near the computer at the time, so I missed it. And what we've got going on here, we did have a supply zone here which left some imbalance behind. We had a breakage structure, but that did not get respected further down the line, and I'll go into why that actually happened. So what we've got going on here, we've got some equal highs within this range. Okay, so we've got these equal highs, so this was telling me that we've got some liquidity here. We've potentially got some buy stops, or even some sell orders, or potentially some stop losses from anyone that might have been going short from around here. Now as price came back up, we didn't get we didn't get much respect for this supply zone, so price pushed up. Okay, then we've kind of got this ascending channel pushing up here, taking out the highs. Now we've had quite a strong-ish rejection here from this wick, and then what we've then had the change of character happen here, and that's left us with this supply zone here. So what we've then got going on, okay, we've got the this is where traders are then being induced into the market. Okay, so we've got this range, prices consolidated around this area, so we've got these equal highs, and as we've established, this is where I've got sell orders, buy stops, okay, and stop losses. We've also got these low points here, these higher lows, and we've potentially got some stop losses around here, and then we've also got an unmitigated demand zone. So price is being developed in such a way that it needs to come back to collect these orders around this zone, all right, and it also needs to come back and mitigate the area here. So, and that's why this trade played out as well as it did. So when we've had the change of character, we've had this impulsive move. Okay, I tell you what, let's use the replay tool because this will give us a better perspective of what things look like. So we've got the change of character, the impulsive move here. Prices come up, it's tapped into our supply zone, pushed a bit higher up. Now, if you had taken the trade on the seconds time frame, you probably would have had a better entry somewhere within this wick. Okay, but I only go as low as the 1 minute, and as you can see, I was almost taken out. Now, because I use IC markets, they have a 0 spread for Euro US dollar. So as you can see here, didn't quite hit stop loss. It was very close. It was almost a losing trade, but I managed to hang in there. I believe one of the students, he had his entry, I think it was around here on this order block here. So as we advance price forward, we can see we've then created these equal lows around here. So this is another point where traders are being induced into the markets. So if I mark this out, traders are being induced into the markets to facilitate or give enough liquidity for the BFIs to continue pushing price where they need it to go. So here we can see that liquidity has then been taken. We've come back up, we've mitigated this. We've come up and we've then tapped back into the supply zone here. Alright, now this is where I actually got taken out at break even. I had my stop loss just a little bit in profit just to cover the commissions for the trade. One of our students who was in this trade, he did not get taken out at entry because his entry was a little bit higher up than mine. He had a slightly better entry, okay, but he managed to hold on to this trade, I think somewhere down here. So as we can see, we'll advance price forward a bit more. This just melted. Now what's going on here is we've got the reasoning, we've got mitigations that still need to happen. So we've got mitigations around here. Okay, we've got liquidity around here that needs taking. We've got this demand zone that has still got imbalance above it and it still needs mitigating. So this is why this is quite a good trade. As you can see, down towards the demand zone, it was around about a 10-hour trade. Let's keep advancing price forwards. And there we go. That's how that trade played out. So a top tip when you're looking for your trades is to look for areas where there could be liquidity lying. Alright, so look to see if there's any reason why price may go the opposite direction to what you're looking at. So again, have a look at this. We've got the price consolidating. We've got our mitigated range below. Okay, and then once we've had the change of character, then that's given us a reason for price to take this liquidity here and tap into this demand zone. So keep in mind where the liquidity lies, alright, and have a look to see if there's any reason why you might be being induced by the BFIs and the big players. Because if you're the one being induced, then there's a good chance that you could end up being on the losing side of a trade. Okay, so we want to be looking at as much detail as possible where the inducement is, so that we are on the same side as the banks. Because if you think about it, the banks know how smart money traders work. We are still retail traders. We are not above other retail traders. We might have a significant edge, but we don't always know exactly where the markets are going to go. So if you found this useful, feel free to like and subscribe. Leave a comment in the comment section below. Let me know what you think of this video, and see you soon.